discuss about one stock which belongs to agrochemical sector. So before we jump into the discussion of the stock, we need to understand what is agrochemical sector and why it is so important for India. So agrochemical sector is divided into 5 different parts: insecticides, fungicides, biopesticides, herbicides, and some other products, which includes your rodenticides and your fumigants and plant growth regulators.
So now with the help of these charts, let's look at how important agriculture sector and how important agrochemicals as a sector is for India right now. So the first chart what you see is the percentage of farmable lands, basically agriable lands available over a period of time in India. So in 1951 it was 0.34, basically 34%. It was 15% in 2001. It will reduce to 8% around 2025, and it will further reduce to 7% in 2030. So that means the kind of land what we have available for agriculture reduces, and so what we need right now is optimum utilization of these lands to meet the growing demands of the country and also the export what we do as a country to other countries. The production yield basically ton per hectare. So if you see, Belgium has a 10 ton per hectare production, whereas Netherlands, France have 9 and 7.5 respectively. Germany, UK, USA are around 7 together, not together individually. China around 6.5, but India, if you see, this is around 3 tons per hectare. Now, considering the population difference between Belgium and India, it's more than 3 times, but the land production yield also is more than 3 times case of Belgium, favoring the Belgium and then India compared, right? Now, to meet the demand of population, either we should have more land which we don't have, and then we need to increase the production. As you saw previous chart, we have land reduction, and then the demand is to increase the production. And compared to other countries, developed nations, we are lagging behind in terms of yield also. So overall, the yield need to be increased, the production capacity need to be increased, and production quality also need to be increased. So all three, if this increases, then only we can meet our demand.
Our stock for today is Heranba Industries Limited. So this particular stock is divided across the entire product vertical of the agrochemical sector. That means it deals with insecticides, fungicides, herbicides, rodenticides, and biopesticides as well. So they have a total of more than 50 plus products. We'll see the company's history in brief, how it all started, for the journey so far, and then we'll see the future prospect of the company based on their call and everything details given by the man. So if you go back to the history of the company started the operation in 1996, and till 2005 they were mostly into formulations. In 2005 they launched their first product in India, and 2009 they reached a revenue of 100 crores. So after 2009 they started working more and diversifying their products, and by 2015 they took a revenue of 500 crores. So basically they took 6 more years to reach a revenue of 500 crores. And post 2015, 2019 was the year when they touched the revenue of 1000 crores. And after 2015, they tried to diversify because they saw a risk in Indian market. Risk, when I say risk, it means they want to mitigate the risk, means they want to diversify the different markets. So if there is an issue in one market, if there are any concerns in one market, they can maintain the revenue from other markets. So keeping that in context, they want to diversify and they start expanding to multiple countries. In 2019, they registered revenue of 1000 crores. Last year, they registered revenue of 1225 crores, and they do business in 60 plus countries. So now we'll discuss few fundamental points of the stock, which gives this stock a very strong fundamental reason why we should buy this stock, or why we should even consider discussing about the particular stock.
So when you talk about fundamental points, the P ratio for the stock is 13.6, which is quite attractive. ROC is 45.3, which is very good. ROE is 36.3, which is exceptionally good. This company is debt free, which is very, very important. They have some debt, but the kind of profit they generate is more than the debt. So that means they are virtually debt free company. Promoter holding is 74.8%. That's the maximum, almost maximum what a company can have in the stock market. That is 75%. So promoter holding and debt free are a very, very important figure for this company, because they are the best possible scenario right now for this company, like best promoter holding, and they're a debt free company. 5 years sales growth has been 19% only, but 5 years profit growth has been 56%. That is tremendous growth. This company has been multiplying their money every year, and this reflects in their reserves. So reserves for the past 5 years has increased to 5x. So 5 times the reserve has increased. So more is the reserves, more is the capacity expansion, and all things these companies can do and they grow their business.
So the company has planned a capex of 250 crores, out of which 100 crores has already been spent. Remaining 150 crores will be spent around next 2 years. Like, I mean, this is the current year and the coming year. So they're going to expand their particular capacity. So around 15,000 more tons, out of which 5,000 will be expanded in the first phase, and remaining will be expanded in the multiple phases. By doing this, they are going to expand into multiple products, as I told you. and they're going to expand into multiple countries also. First country what they're targeting is US, because US is a regulated market, and they will launch their products in that particular country in the B2B domain. That means they will not launch their product in directly to customers. They will have partners, and they'll use their partners to launch their products in the B2B segment in the US market. So they have already registered a lot of formulations for that. They have been doing business in a lot of markets, and US market is quite easily for them to be accessible. Now, if you go by the commentary of the company, two things what they are saying. First, if you go to expand into foreign lands, that doesn't increase the particular cost of doing business. So for them, it's the same thing. So margin is not getting increased also, another margin is getting reduced. So margin of this company is around 18 to 20%. They are trying to maintain that margin. So the margin is not getting hit. And the price of this company is also very standard. They're not going to reduce or increase the price. They're only going to fluctuate the price based on the market conditions. That means when shipping cost is increased, they've increased the price. When shipping cost reduced, they reduce the price. And when this particular raw material price got increased, they increase the price, and they now reduce the price also. So they have this price power as well. Pricing power, basically what we say. So they have this pricing power as well, what they can do. So this company is sitting on a very strong client list also. Companies like Sharda Cropchem, UPL are their clients. So they do production for these companies also. So one basic strength of this company is backward integration. So what is backward integration? So whenever to produce anything, what are the raw materials are required? If you have the supply of the raw materials within yourself, like within your company, that means you are backward integrated. So to produce all the formulations, technical products what this company needs, they have source raw material at their own company. So this company is backward integrated. So one of the advantage of doing this is that the cost of inflation of raw material doesn't impact this company compared to their peer groups. This is a very clear advantage what this company has compared to other companies or other peer groups. So first is price purchasing power or price selling power as well, and second they have this backward integration, because of which they control the inflation. So they are kind of dominant in one particular segment called pyrethroids in India. So they have more than 20% market share. This looks very great for the company, and for me this particular company looks very interesting and very attractive to invest. Their PE ratio is also very good, very less compared to their peer group. So this was my opinion, this is my research. You let me know in the comment section what you feel about the stock. Thank you so much for watching. Stay happy, stay safe.